Things like this, you need to watch the spread. You see it open up higher like that, fools a lot of people. You got a 82-cent spread there. So it's actually showing 16 as the last price, but that doesn't tell me a lot until it actually opens, which we got about another 18 minutes. We'll find out when it opens. So kind of see the health. See our structure's still in place, nothing's changed. This means nothing until it hits that red line. It gives us some money. Stick to the rules. Stick to the rules. Stick to the rules. If you stick to the rules, you'll be happy. If you don't stick to the rules, you won't be happy. This is that one I was talking about. See the spread on this? It's 15.25 to 15.88, and it's showing 16. That to me is a fake out. That's market makers just punching it up for whatever reason. You look at this one, 81.42, the spread's 81.60. That's more legit, right? Because it's in the middle. Just something to look at. If you don't have this stuff to look at, it's not a big deal, but you don't make any decisions based on opening price anyways, especially in the middle of the week. You should have your, if you have your scan in front of you, you should know what you have in your portfolio, what you don't. Going over several different ones here. Just like to see what they're doing. It doesn't, just because I'm looking at it doesn't mean that it's going to do something special. It's just something I've done over the years. Gives me a better idea of where the market might be going, but I don't make any decisions off of it. It's just kind of habit. The best thing you can do is put your orders in, set your sell limits based on the strategy. There's several different ways to do it. I've got several different strategies. The only ones I show you here is I try to be consistent. Other portfolios that I manage, I may or may not do different strategies on them. Just depends on what somebody wants. But there is no aggressiveness. There is no aggressive trading. There's just different ways of doing it. It all hinges on money management. So if you don't know how to money manage, I don't care how good a trader you are or how much money you've got, you'll eventually give a lot of that money to the market because you don't know how to manage it. Anybody can hit a button to buy something. Anybody can push a button to sell something. Whether or not you can make money, it's a different thing. Everybody thinks, quick. I can make money if I trade real quick. If it was easy to do, everybody'd be doing it. But nobody wants to learn. Nobody wants to have the patience to learn. So they want, the quick fix. First off, they get into money problems. So if you got money problems, this is not going to solve your problems. So we look at this, right? No one knows where this is going. I have no idea. See how it jumped up there? Now it's coming back down. We have no idea. Remember, these are weekly charts. And we don't play on these minutes, dailies, 30 minutes, 15-minute charts. I mean, I can trade them, but What for? We're trying to grow our money. I'm not into taking losses. So we manage our portfolios accordingly, based on how much money we have. I don't care if you've got $1,000. You don't want to lose a penny. You know, if you got $100 million, I don't want to lose a penny. The whole idea is to grow it. Doesn't matter. The money management is the same. Now, I say same. Size is different. The scale is different, you know, but you manage it almost exactly the same way. There's not that much difference between a billionaire and somebody just starting out. It's all, you have to manage it the same way if you want to win this game. It's a long game. You have to be in it for the long haul. You're trying to get in and out of the market really quick. Hey, everybody's making money on options right now, right? Because everything's going up, and everybody thinks this is a never-ending thing. But there are people losing money. All the shorters, they're getting killed. Volatility, anybody that's selling premium right now is getting killed. This volatility is so low, they can't make any money. But there's very little to buy out there. So you hear a lot of, they're trying to create volatility in the market, and you know, news events, weird things happening, you know, just all kinds of strange things. But when they keep pumping that money in, you might as well just keep taking it. But the only way to take that is through dividends and smart trades. If you can't close a position, you got to hold it. You know, but you don't want to be holding one position with a bunch of money in it, because when it decides to turn around, I mean, yeah, you're making dividends, but you're not making any other kinds of occurrences. So you can't increase the amount of capital or the amount of money that you're bringing into your account. So let's take a look over here. I'd like to show this for anybody that's new out there, that's just come across it, and kind of go over this stuff over and over again and say, okay, where were we? So this was last month, right? So we show the days that we don't do anything, right? So we had some 0 days in here, didn't pull any dividends there. So it looks like a total of 6 days we didn't pull any dividends in. That's paying dates, right? That's not ex-dividend dates. We post the ex-dividend dates because some things will come off if you sell it before the payment date. It just depends. There's a lot of variables there. But there's, let's see, two days where we didn't profit in the market. So that's not too bad. But you can see where our profit on our trades outperforms our dividends. And we still did pretty well. This is the accumulation of 3 accounts, right? And so it's just easier to put them all together and show you what you can make. These are small accounts. All 3 of them are under 100,000. You know, if you've got a smaller account, we go over what you can make. You know, we're trying to hit that 1% per month. That equals 12% per year. If you can average that and beat it, you can increase your portfolio size just by adding a little bit of money, 1 or 2 positions here, and it's a scaling issue. I shouldn't say issue, it's just a scaling strategy to try to bring more money into your account with a smaller account. Most people are going to have a smaller account. Now, if you've got a larger account, maybe you have somebody managing it. You know, if you want to save those fees, you can watch us for a while, and then you can figure out, you know, which direction you want to go with it. Some people are scared to death to manage their own money. I get it. You know, you start getting up into those large sums, it can be nerve-wracking, right? Because you're like, well, I hope I'm not making a mistake. Well, there's ways not to make mistakes. But who was telling me, it's like, you know, you can't make any money off of dividends. I was like, yeah, in a small account. And I said, well, everybody had to start somewhere, right? And Warren Buffett started with $1,000. Everybody said, well, you can't use him as an example. I said, well, let's just scale his position in Coke down, right? Let's just say you had 100 shares. Let's just say you had one. Well, he's got, I think it was at $50. $50 a share. Let's take a look and see. We'll put Coke up here because he's got, it's $53 a share. Let's just look at what it's only paying 3.2%. How does he make 20% on this? Everybody's like wondering, how is he making 20% per year if it's only paying 3.2%? The trick is he's buying and selling it, right? He's taking more out than he's leaving. When it's up, his shares have gone down. I don't care what publication you're looking at or whatever else. He is buying and selling. Okay, his portfolios are not staying static. You know, maybe Coke's a bad example. I don't know, but they are constantly in and out of the market. Right? They buy when it's low and they sell when it's high. How do you do that? Well, you never sell when it's coming down at a loss. He's always improving his position. He's taking losses, right? But probably for tax purposes. He doesn't do it on purpose. Well, I say he does it on purpose, or any, you know, hedge fund or any investment firm, they take losses and they have reasons behind it. It's not because the market did it to them. You know, whether it be like, okay, this is just underperforming at this time in the cycle. And they're like, hey, we're up $100 million. We need to write off $2 million. So they take a loss on so many shares in some product, you know. Doesn't matter what it is. So, I mean, but we're small, okay? We're not investment firms. We're not looking. What we're going to do is we're going to scale back and learn how to make money with small amounts of money. And he'll even tell you it's easy for the individual investor, the retail investor, to make money in these markets. It's hard for him. Now, hard because he can't deploy the cash. That's the problem. It's not hard for him to make dividends when you've got 400 million shares and you're getting paid $150 million a quarter. I mean, you can buy up everything in the market and just live off dividends, right? Well, who lives off $150 million a quarter? I mean, come on. Yeah, sure, he's got to pay shareholders and everything else, but let's be reasonable. If you want to manage your own money, you have to scale back from what he's doing. Don't be thinking that, well, just stick all your money into Coke or stick all your money into, you know, I don't know, whatever company out there. It doesn't matter. You have to diversify yourself. That way you have the ability to make occurrences. Now, if you're like totally risk averse and you don't want to trade and you don't want to do anything, I talk to a financial advisor and see what they have to say about what, you know, which direction you need to go. If you're scared to death of managing your own money, then hire somebody to do it. But don't, you know, they're going to take a different approach than you will, than just being fearful and scared of what might happen. You know, the markets are cyclical. This one's been on a pretty good run here, 12 years running. So we just kind of, you know, you take what it's giving you. See, he's sitting on a bunch of cash. We're sitting on some cash. This account doesn't have a ton of cash in it. 4,400. What's this other one got here? This account has 11,000 in it. Let's see what this other one has. This other one's got 17, almost 18,000 sitting in it. This is being ready to deploy and say, well, you can't make any money if it's just sitting there. It's like, that's not the point. You have to understand your risk. Your risk is in deploying too much cash based on the size of your account. If you can't recover from a loss, if you say, okay, I can lose $170, we'll take this ACV for example. I can take a $170 loss, right? And what percentage of my entire account is that? We're just going to use that 65,000 number. That's less than 1%, isn't it? Take 170 and divide by 65, 691. Well, yeah, like multiply that by 100. That gives you your percentage. It's 0.25% of your account. It's not 2.5%, it's 0.25%. So how many times can you lose one of these positions before you lose your account? I can tell you how you can lose your account is putting all your money into ACV and sitting on it and collecting 6.2%. That's a great percentage, right? If you wanted to do it that way. But what happens if this company decides to go down? Right? Let's just say it goes down to 0. Closes out. It's done. It's gone. Where'd your money go? It's gone. That's your risk. So you start spreading it out, you could have 100 different positions all earning all these different percentages, right? And they all add up to 9.26%. That's even better, right? So none of these will actually hurt you. The other side of the coin is most people don't understand what unrealized loss. They see this big number here and they're freaking out. Man, you're down $15,000. I say, I ain't down nothing. If this was green and showed 15,000 plus on unrealized profit, I'm not up $15,000 until I hit the trigger. This is unrealized. Stays in this column, doesn't matter. It can be there for 20 years, doesn't matter what this number is. But I keep pulling these numbers out. It's like, okay, when BGH comes up, let's look at the chart, comes up, it hits that. It becomes realized once I sell it. So if this is green and it becomes realized, and this value will actually increase if it's negative, right? Because you're subtracting or you're adding that to this. So it all goes back to a number line. You understand your number line, 0 in the middle, negatives to your left, positives to your right. Just remember that the negatives here, they're not realized until you hit that button. Now sometimes you're forced at, but it doesn't happen very often. Looks like we're running 307 days without a loss. So you can see what we've done. We go back to this chart, that's last month, and this is so far this month. So we've had the first, right? So we had dividends. We don't have any, what was that, Thursday? Yeah, because was it Friday? No, that was
order filled.
Oh, looks like the market's open. We just sold EOI. That is a CEF. We'll look at that in just a second. But when you're looking at this, you're saying, okay, it looks like our dividends are outperforming our profit right now. We'll see when that changes, if it changes. It could be that we don't profit anything and the market starts crashing. Guess what? You know, some of these positions may perform, some of them may not. They don't mirror and they don't correlate with the main market. This is just people trading. So if this just stays steady, that's what we've made, 230. Let's say we've taken no profit for the rest of the month and it stays at 430. The dividends will continue to increase. It doesn't matter what the market does. Keep that in your head. Okay, so looks like we picked up VGI. That's a DCA, meaning dollar cost average. We'll look at that chart first. Let's see where it's at. VGI. Okay. Okay, so we picked it up. So now we need to see, you can see where our average cost is. So it moved us down about 17 cents because now we have 205 shares and looks like the max shares are 21. So we can buy some more if this goes up. This is something that It's a proprietary thing that we have just on max shares based on the size of the accounts. But what this will allow us to do is we can target. Now we can get rid of this because we're in a different cycle. Our next, we want to put an alert down here, right, somewhere down here, just in case the price comes down and our next buying opportunity is down here at 1041. That's set in stone right now, okay? This is just a reference point. We're not worried about anything else right now. It's either going to go up here, and whatever the target price is $1.20 above this average. So if it's 1388, what's our number? 1388. So it looks like it's going to be 1508. That would be our sell price. But because we're not even close to it right now, we're not worried about it. This is a dividend producing stock. We are just, what are we going to make on this? 205 multiplied by $1.20. This is per year. Okay, $246 a year divided by 12. You make $20.50 per month. Right? And what's that average? 9.9%. Where are you making that kind of money? Right? You just leave it alone. Go on to your next one. Let's look and see what was that sold. That's on that account. Let's go over to some of these others. All right. Oh, I meant to bring this up yesterday too. I got off a little early, and AGNC had sold. That had been in the account for quite some time, it looked like. And then EOI, that just sold this morning. You can see the timestamp there. Let's just make sure nothing else sold. Sometimes you don't hear it. Nope. All right, so we'll go back and we'll look at that. EOI. EOI. You can tell by down here at the bottom, this is a monthly dividend payer, right? So we're out. We're going to remove all of this information because it's no longer needed. This can stay. It doesn't really matter. It's a good reference point. So it jumped up and hit it. And we didn't make much on it because I think we got in somewhere here and we're out. But this was more of a long term. Made 6.2% on the move. We're going to copy that and send that over to Twitter. The folks that follow us over there. But CEFs are a good thing. I like them. Always invested in them because it's just, they're cash cows. You can look them up, learn more about them. I'm not telling you what to buy. I'm just telling you to go look up CEFs if you're new to this. So EOI, that was 6.2. Yep. All right, so let's take a look at that AGNC. I'm sure it's still. Yeah, I needed to take this stuff off. So this one had actually been in this account. I don't know exactly how long it was in there, but it was in there a long time to get up to that many shares because we were on max shares, which was, what did we end up selling on that? 84, and max shares were 96. So we were we were in the ballpark for max shares. So they once they're up into the max shares, there's only one thing that can happen, right? You sit on it, and if the max shares increase, yeah, you can buy some more, or it goes up and you cash out. So that was a good take for yesterday. We don't get all hyped up about, what we sold. We don't go running around telling everybody, hey, look at this, you know, we're such geniuses. This is market movement, right? We're letting the market come to us. So what's happening right now? Hey, the market's backing up. Well, I'd say the market, these accounts are actually showing negative, right? So what does that mean to us? Absolutely nothing. Each account is different. Look, this one's positive, right? Let's go over to this, check this other one. Let's see what this one looks like. The overall count, this one's 72. So there's got to be, think about it and use some common sense. Why is this one backing up? There must be one that's pulling it down, right? Oh, well, maybe there's more. Oil's bringing it down, $72, right? Is there any more in here? I don't see any more big moves, but 72. Oh, here's one. Murphy, another oil, $22. Just on the size, right? Because this one's got, what, 106 shares? And Murphy got 47 shares. So, I mean, you have to use some common sense when you're doing this, but at the same time, there's no, I mean, everybody wants to see these charts and think, hey, there's got to be something in this chart that's giving him all this information that he can, you know, make money off of this. And no, this is money management. This has nothing to do with charts. This is meaningless. This has nothing to do with anything. You want to draw a line on there? Okay. You want to draw another line? Okay, here's another line. What does it mean? Oh, if it's on this side, you make up whatever you want. It doesn't matter. All these moving averages and all this other garbage that people look at. Hey, if you want to try using it, hey, be my guest. But you'll waste a lot of time trying to figure out a strategy instead of just using math. Something they don't teach. Everybody's got the basics. Everybody knows how to, well, I assume everybody's got the basics, you know, adding and subtracting. All I know is I want to add to my portfolio. I don't want to subtract. But when you hear people saying, well, it's customary, or in trading, you have to accept losses. It's just your gains have to be more than your losses. And I say, I don't have that philosophy. I don't want to lose a penny. Worked too hard for my money over the years. So you should have that same thing. If you want to get to a point where your money is working harder than you are, then you'll adopt a process that is rules-based, and you understand that your money is going to constantly make money. So when you set aside, I don't care, 5, 10, 15, 20% of your paycheck, you have to realize that you're sticking it into something that you're never going to touch. And I say that meaning you want it to get to a point, if you're making $50,000 a year and you have $500,000 in your account, you can say, hey, you know, I'm making 10% a year. I can stop working. And if you're debt free, if you can't live off $50,000 a year, well, I'll stop there. Some people want to live off, you know, $200 million, and they can't do it because their lifestyle. I mean, just look at all the rich people that lose everything. Let's take a look over, see what's going on. See how this overall market is, like NASDAQ is up big. You're pretty much flat on the ES, a little bit nudging to the upside. But then you look at these accounts and look at all these things that are negative. You're like, it's non-correlated. Don't fall into that trap looking at this crap. You know, the Dow, the ES, all of these things, they're indexes. CVX. Let's see if that's on our scan. Don't think it is. It is not, but we'll take a look at it and see what it's doing. We may have it in one of our portfolios. I can't remember. It's oil, so I'm assuming it's down because we've hit an alert. Yeah, we hadn't traded it for some time. You can see back here. Just want to make sure we don't have, I'm pretty sure we don't have it in any of our accounts. I'm not seeing it there. Nope. Yeah, so I mean, if it comes up on the alert, it's just one of those old ones from whenever. There was probably somewhere in here there was it was on the scan maybe. I don't remember. I mean, I look at so many different scans for so many different things. Um, but you can make up anything you want to get into the market. But if you don't have this money management skill, you will have issues. Now, there's some people out there that I don't know how they do it. I'd like to see their profit and loss statements, but nobody's ever offered them up. We show every month what we're doing so you can learn it. Then all you have to do is scale it up. But if you're in a rush to get to $1 million, you'll make big mistakes. Let it come to you. A lot of people making, well, I keep hearing a lot of people are making money. Another oil company, MPC, is that on there? That one's actually on there. So let's take a look. I think we already own it, so it might be a dollar cost average, but we'll see. Oh, now we're already in. See, we have a trailing order in on that. And we're, looks like we got an old thing on here we need to remove. So yeah, 23, so max shares on this size of account. We go through this. The cost basis on this account is 19,447, so that's under 100,000. It's pretty easy to understand. So we go 10% of max shares. But you get up over 100,000, you can go to 20% of max shares, which means you could go 4 shares. You're never putting all your eggs in one basket because we don't know where this is going. We have a strategy to get in, right? So we're not paying the top price, are we? The most we'll pay right now, if this goes no lower, would be 54.04. If it continues on down, we just let it go. We've got multiple trailing stops in. Let's go take a look. Let's do it alphabetically. You can just look for the blue, right? And then we look in this column here. We have a limit. We have another limit. All we're looking for is a trailer. Oh, there's one. All right. MPC, that's the one we just looked at right there. So we have another trail in here down at NHC. All right. We have another one down here, PSX. These are from prior scans, right? So the price is continuing on down. So we're just following the price down. So we only have like 4 or 5 on that particular one. But you get the idea. When we place these orders, we're trying to get better pricing. That's all we're trying to do. And we're trying to have as many positions on as possible. So if we look, what did that EOI pay? $14.64. Gotta write that down. Keep track. Put it in our little chart so we can add to it. Let's look that thing up real quick. So profit $14.64 so far, right? That's how you do it. So you can click on this. Oh, I'm going to do this first. Right? That expands it. Plain and simple, right? All it changed was the total here and the total here. This hasn't changed, right? Because we didn't have any dividends. It's probably going to be 0 today too, so we'll just punch that in there. I know it's going to be 0 today because it showed up in our statement. I look at statements on all accounts to make sure that nothing weird has happened. That's managing your portfolio. If you just like carefree about it and you're like, oh, hey, I missed that, and 6 months later you're trying to complain to them, like, you had some mistrade or some weird thing happen. Good luck trying to get them to change it. They assume you're watching your money. A portfolio manager manages your money. They watch it because they don't want to be responsible for losing the money. So if you're lazy-minded, maybe you ought to hire somebody to do it for you. Oh, yep. I like it when we get a little bit of backup here because it's what? A buying opportunity. If it fits our strategy. Our scans are sitting there. We've got positions just waiting to be filled. If they don't get filled this week, then we have a new scan that comes out on Sunday. We put all our orders in and we wait for them to be hit. We're not chasing anything. We let the market come to us. We buy when stuff is going down. We sell when stuff is going up. It's that simple. But if you're, if you know where the price is going, or you think you know where the price is going, you're going to make some mistakes. You're going to try to go for the throat, and you're probably never going to profit from it. But that's the nature of the beast. Most people don't understand when to take profit because they've been told you need to take profit when they say take profit, or they give you some price target. In these accounts, we're just targeting the dividend amount for the full year. You know how many times we hit the dividend for the full year? And this is just the last 7 days. I mean, you can go back in our portfolio. We got thousands of trades that profit. Look at this one. All these in a row. These are all representative of the dividend amount for the full year. Just multiply it by the amount of shares that you have. People sit there, oh, you're not making any money. I was like, what are you talking about? I'm making money all the time. If I'm not taking profit on trades, I'm taking profit in dividends. These are just small accounts. You need to understand scale. If you can't manage a small account, there's no way in hell that you're going to manage a large account. You think you know what you're doing, but you don't. Now, there's some gurus out there that gone through all kinds of financial education, have a degree in engineering. So if you want to debate me on it, go for it. But I've taught a few people that are financial gurus how to make money in any market. They teach you how to brainwash people. And a lot of these financial people think they know what they're doing. It's like, yeah, I'm gonna borrow $300,000 so I can make 10% on it. I was like, okay, well, you got 7 years to make that double that money. And if you use my strategy, yeah, you could probably do it, but you have to take into account what percentage you're having to pay, and if you take a loss, how much harder it is to get that money back, especially when it's not yours and you still owe it, and the interest rates start rising. People start making stupid decisions. I can see it coming. No, we have EOI on this account too. Now, do I know that that's going to hit that 1740 mark? Nope. I have no clue. It could hit it while we're talking. Let's just sit there and watch it since we only have about 10 minutes left. This is one thing I tell people never to do. Sit there and watch it. So we're not going to sit there and watch it. If it hits, it hits. If it doesn't, we collect dividends on it. It's never going to be sold. Here's another one, ETR. That's energy. I think they're based out of Arkansas. Pretty sure they are. But either way, if it hits, it hits, right? So you collect your, what's it going to be, $7.60 because you got 2 shares. So how long do we have this one for? It had been bought somewhere in here, right? So a couple weeks. Well, it took you 2 weeks to make $7.60. That's like, okay, you're looking at a moment in time, 2 seconds here that I just talked, and you hadn't looked at the entire plan. Everybody wants that in that 2-second window. They want that $1 million. Show me, show me, show me, show me how to make $1 million right now. I'm online. I need to know. And they just don't get it because somebody told them that there's some guru out there that's making $500,000 a day in the market, and he's online. It ain't happening. When you look at Sam Walton's approach to things, I always use this as a he's dead now, but for Walmart, he always wanted to sell something at a small amount. So when he bought something, right, if he paid $1, maybe he wanted to make 5 cents, but he wanted to sell millions of them, right? So at 5 cents, or let's say he just made $1, he'd make $1 million. This is his approach. This is how he became a billionaire. And people still hadn't figured it out. It's obvious everywhere. Every time you go shopping, you're paying a small markup. Unless, of course, you're the U.S. government that's buying a space shuttle, is paying $50 million because there's only one. Makes sense, right? But when you got a can of beans and there's billions of cans of beans, they don't need to make $1 billion per can. They can make 5 cents per can. Maybe you get my point, maybe you don't. I don't know. Some people continue to argue with me about it. It's so simple. A caveman could do it. I post that stuff because it's so true. It's like once you get it down and you stop, following the hype that's out there. The hype is what gets everybody broke. Because they believe. They want to believe, They want to be showed the promised land. They want to have the hero there instead of just that nice curve, that money that just keeps on coming. The line goes from left to right, goes from high to low. That's why when you look at these, let's go back to this other one because that one's not really complete. What direction is it going? Up, right? So if we go back last month, it'd be down here. Just keeps growing. And same thing here. You don't see this coming down at all, do you? Why? Because there's no losses. By the time we get a loss in there, this thing's going to be so high off the ground. Are you even going to see it? If we put a chart together that showed everything? No, you're not. Because the loss is going to be so small. Looks like ZTR is moving up a little bit. Oh, yeah. Well, that's my rant for this morning. ELY just hanging out. ETR. I'm sure as soon as I get off, it'll activate, and I'll have to talk about it this afternoon. It's usually the way it works. Sometimes, though, we get it where it's live, So if I sit there on it, it's like, hey, let's watch it. Say, don't watch it. See, it went up there. What's it been? It's been as high as 37. So it's been within 3 cents. So we got 5 minutes left. Yeah. Not a heck of a lot going on. It's another one of the. This has been a kind of a weird week. Not a lot of volatility. That's some decent profit. It's at the end of the year. How much did you make? That's what really matters. Did you profit or did you lose? Yeah, I need more coffee. take a look at it. Mosaic. Mosaic's nice because it's easy to look at. Let's just look at the big movers. CIT is down. EIG is down. WS is down. Let's see, I don't have to be in front of my computer because I have these alerts here. So it'll go to my phone, alert me. I can trade it on my phone if I want, but normally what I'll do is I'll wait and I'll put an order down in here at 72.35, right? But I'm not going to put the order in because it takes away from my cash reserves. So if you did this to every one of them, you know, you just, I mean, it's a ways away, right? So was it $16 away? So we don't want to worry about it right now. But depending on the platform you use, I'm using Interactive Broker for these educational purposes, but I use TD Ameritrade, I use TradeStation, I've got accounts with E-Trade. I mean, they're all over the place. But, you know, this one cost me $1 per trade. Customers that use this, it's $1 per trade. If you use the Pro version, they do have a IBKR Lite. I'm not endorsing them. I'm just letting you know what we're using here because a lot of people ask. If you keep it simple, you know, their charting platform is nothing to rave about. I use a MotiveWave software with TD Ameritrade. It's just a really good API link. Makes your trades smooth, seamless, better charting. If you want to know more about it, just go over to MotiveWave. The guys are out of Canada. I don't endorse them, not paid by them or anything. If you want to use them, check them out. But, you know, as far as charting goes, I'm looking for API links. I mean, I wish somebody had come up with something for E-Trade because a lot of people use E-Trade, and it is a tough platform to move fast on. And sometimes I have to move pretty fast, especially the size of the account, some of the accounts that I do. And these are relatively small. But, you know, we ain't got anything going on today. So all we got going is collecting dividends. That's what we like. And we forgot all about this. So we got ex-dividends today, ACV twice, CRF, PCI, PDI, PKO, VGI, ZTR, CLM, and EVV. So quite a few CEFs in there paying today. Those are always nice because they pay monthly. And we like to see that come into the accounts because what does that do? It raises our cash reserves so we can redeploy that money and buy other stocks and have the opportunity on these small moves. It's all about scale. You have a small account. A small account's anything under 100,000. You have to be real careful with your money. As you get bigger, the scale is just bigger. You're still being careful with your money. You have to be risk averse in these markets. You don't go all in. You go all in, you're going to get hurt. Don't have FOMO and no YOLO plays. If you don't know what that is, look it up. All right, well, we'll be back this afternoon. Looks like it's going to be kind of a flat day, and I don't know what's on the agenda, but I got things to do. Gotta go to the DMV. Anyways, have a great day.